Demand for Bitcoin ETFs is surging as the Wild West meets the wall. This week, Wall Street opened its doors to the crypto industry, as the first U.S. exchange-traded Bitcoin fund raised more than $1 billion in capital and pushed the prices of the world's largest digital currencies to new highs. Similar instruments currently trade in other markets, but the debut of a crypto ETF on the world's largest stock exchange marks a huge milestone for crypto proponents after 8 years of lobbying regulators. For the first time, institutional investors can now include a Bitcoin-linked instrument listed on the New York Stock Exchange alongside traditional financial assets such as stocks and bonds. This is the quickest ETF to reach $1 billion in assets. This is unparalleled in terms of asset growth and trading volume and reflects pent-up demand, said Todd Rosenbluth, head of ETF and mutual fund research at CFRA. The successful debut of the Bitcoin ETF demonstrates how traditional financial institutions are vying for a piece of the digital asset business. It also demonstrates the rising recognition among many financial watchdogs that the sector has grown too huge and is growing too quickly to ignore. Retail investors accounted for approximately 12 to 15% of net buying in the ProShares ETF during the first 2 days of trading, indicating strong institutional interest, according to JP Morgan data. 3 days after the ProShares product started, another comparable vehicle sponsored by Valkyrie Funds emerged on Friday, in a move analysts believe to be copied numerous times. Additional headlines this week, including a record-breaking funding round by crypto exchange FTX backed by a slew of high-profile investors, have fueled the frenzy surrounding digital assets. These evidence of growing interest, combined with an increase in professional traders utilizing cryptocurrency as a platform for sophisticated market wagers, helped boost Bitcoin beyond $66,000 for the first time on Wednesday, before reversing course to around $61,000 by Friday. Coinbase's stock, the largest publicly traded exchange, rose more than 10% in the days preceding the launch. Many observers, however, believe that the debut of the ProShares ETF is only the beginning of a much longer battle to convince the Securities and Exchange Commission that a product providing direct access to mostly unregulated crypto markets should trade on Wall Street exchanges. The SEC's decision to approve the ProShares ETF was based on the fact that it will invest in futures contracts traded on the Chicago Mercantile Exchange, a fully regulated market, rather than in digital coins outright. Cryptocurrencies are often purchased and traded through a diverse array of outlets, in what Commission Chair Gary Gensler has dubbed the Wild West market. What you have here is a product that has been supervised by the Commodity Futures Trading Commission for 4 years and is being wrapped in something under our authority. We have some potential to bring it within the realm of investor protection, Gensler told CNBC. The retail broker Interactive Brokers launched crypto trading for financial advisors on Monday, but its chairman, Thomas Peterffy, was more reserved about the benefit of holding the ProShares fund or similar funds to investors. Peterffy, who helped launch computing onto Wall Street in the 1970s by utilizing machines to assist in calculating the value of securities and options, stated that crypto's main utility was as a fallback in the event that the monetary or banking system encountered difficulties. I believe that when such a crisis comes, these ETFs will trade at a significant discount to the coin's value. As a result, I believe it is of no benefit. As long as people do not consider it, the price will fluctuate in lockstep with the price of Bitcoin. Others have noted that an ETF that is based on futures contracts may become unattached to the asset it is designed to track. Over the last decade, so, the $2.9 billion oil ETF, has frequently deviated dramatically from the price of U.S. crude oil. One issue is the roll cost, the fee incurred by the fund manager when the preceding futures contract ends. This could be more costly if the market anticipates a future increase in the price of Bitcoin. If the futures price is greater than the spot price, the ETF may underperform the profits generated by owning Bitcoin outright by approximately 7% per year, according to Andy Capirin, co-chief investment officer at Regent Atlantic, a $5 billion registered financial advice firm. This increases the cost of the product for investors looking to keep a position for the long term, Capirin explained. This will keep it confined to short-term trading portfolios and away from long-term holders, he explained. It is a no-go for advisors when it comes to advocating long-term holding positions, but admitted it was an excellent product for trading. That is why numerous asset managers are already pursuing approval from the SEC to launch funds directly tied to cryptocurrency prices. Additionally, some ETF sponsors have withdrawn from their own futures-based products. Invesco stated that it would focus on obtaining clearance for a digital token ETF. Grayscale Investments announced plans to convert its $40 billion Bitcoin Trust, the world's largest crypto investment fund, into an exchange-traded fund that will own digital tokens outright just before Wall Street started for trading on Tuesday. There is some enthusiasm in the industry that we now have an ETF, but this is just the beginning, said Dave Laval, Grayscale's global head of ETFs. Ultimately, investors should have a choice between futures-based ETFs and real Bitcoin-based ETFs. It may be a distant fantasy many years in the future. Brett Harrison, president of FTX's US subsidiary, said the SEC's decision this week to allow the ProShares fund to proceed was unlikely to be the first of a sequence of regulatory dominoes to fall. I believe the SEC is waiting to see how spot crypto exchanges are regulated before agreeing to it, he said. SEC Chairman Gensler has urged US lawmakers to grant the agency authority to regulate crypto trading platforms and to require them to register with the government. Additionally, the SEC is embroiled in a contentious legal battle over whether digital coins should be registered as securities at all. Numerous prominent cryptocurrency players take a contrary position to such notion. It's quite improbable that a direct Bitcoin or other form of crypto asset fund will be allowed in the foreseeable future, Amy Lynch, founder and president of Frontline Compliance, a regulatory consulting firm, said. At the moment, the problem is precisely the format of these assets will be considered a security. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.